Hello and welcome to Inside CalSTRS Investments, a series of short conversations to help you understand how your contributions are invested to create a secure retirement for California educators. I'm joined today by Chris Ailman, the Chief Investment Officer for CalSTRS. Welcome, Chris.
Well, and Mike, welcome to the trade desk. Welcome to the audience.
Well, thanks a lot. Well, let's get right to it then. Exactly how do you invest the contributions for the benefit of the teachers?
Well, what's important to know is there's a structure. We start with the fiduciary law that really guides our focus on our members. Next is modern portfolio theory. It's a theory that's been around for over 40 years, and it really guides investments, not in the U.S., but across the globe. And for us, that means to diversify the portfolio. We don't put all our eggs in one basket. It actually also is a state law for us to diversify the portfolio. So the big focus for us is the asset allocation. That's going to guide the return and how we invest the portfolio over a long time period.
How exactly is it decided what percentage of the portfolio goes into each of those asset allocations?
That's what's really guided by the investment committee. The board themselves is what's trying to define the risk level that they're willing to take with the investment portfolio, and then our job is to implement it as best as possible. The board looks at the asset allocation about every 3 years, surveys the capital markets, what kind of returns, what experience, and then goes through a process over several months to try and determine how much risk we want to take going forward. We're not trying to time the market. We're not trying to figure out what's the next best asset class, but really to try and figure out how much short-term volatility versus long-term gain we need for the portfolio.
Chris, you've mentioned the board a lot. Can you explain how our governance structure works here at CalSTRS?
That's a great question. When I say board, I'm referring to the Teachers Retirement Board, which is the board that governs CalSTRS, and it's set in statute. Now that same board is also, all the members on that are also the investment committee. And they govern the investment portfolio, and I report to them, and they set the risk and the return appetite for the portfolio.
Chris, can we talk a little bit about asset allocation? I'm wondering if you could just go through each of our categories of investments here at CalSTRS.
Oh, you bet. The basic way to think about it is we don't put all our eggs in one basket. And mathematically, that was proven by modern portfolio theory, so that diversification helps us. The first biggest slice of the portfolio is global equity. So it's mostly U.S. stocks. We still have a home country bias, so over 70% of that portfolio is in the United States. 30% is outside the United States, mostly in developed countries. And that's the lion's share of the portfolio. The next largest is fixed income, where we've bought the debt of the U.S. government, other governments, but also of corporations, mortgages, securities like that. That's the noise you hear behind me in the trade desk. Is the fixed income trade desk, because we manage a lot of that here at CalSTRS. The next largest are two asset classes that I consider very long term. The first being private equity, where we'll participate in a group and actually own a company and hold that for as much as 14 years. The next is real estate, which everybody knows is by nature tends to be very long asset classes, and that's a mixture of buildings, industrial property, apartments, and some retail across the USA. We're also investing now in infrastructure, where we would own a pipeline or a toll road and get coupon income from that investment. And we think that's going to be a growing area over time. And then lastly, we always have a cash portfolio because we have to pay out the benefits. And we're growing a portfolio that's really kind of a risk offset portfolio. After 2008, everybody realized you needed the ability to be a bit more flexible. I often say we're a very large portfolio, and we should be we're very long term, so we're fairly static in our investment approach, but we need to be a little bit nimble, and we're doing that to hedge some risks in the portfolio more opportunistically.
Well, that's about all the time we have today. Thanks for watching Inside CalSTRS Investments. We'll see you next time.